Hi there, welcome to Kneppy Invest and welcome to the first day of the month, May 2025. Time is currently 2:45 p.m. So we have about 1 hour and 25 minutes left of trading today. Okay, the agenda. So the first thing I'm going to do is talk about my computer. So you might notice I might be looking out just next to my computer every so often. There's a reason behind that. Talk about that. Also talk about all the 4Cs and 5Bs that were released yesterday. A few also came in late today. A few companies were put into suspension because they did not release their 4C or 5B. And then after that, I'll talk about some macroeconomic news, which was quite important. And we had a really interesting session on Wall Street overnight. And in fact, I asked ChatGPT in regards to why we had a weird session, an interesting session on Wall Street. And the answers it gave me were pretty good. Pretty impressed. I already had answers, but I just want to see what ChatGPT spat out. I don't agree with one of the answers, but you'll see why in a second. And then we'll go through the ASX today, look in the best and worst performing sectors, indices, and companies. And then we'll talk about the top 5 stocks of the day. I've already recorded the video, the stock of the day video, which was sort of a no-brainer. I think a lot of you will know which company is going to be the stock of the day. Share price of that company is up 50% last time I looked. And then after the top 5 stocks of the day, no honorable mentions or anything like that, we'll have a look at some of your questions. Okay, computer. So you notice I might be looking out to the side of my computer because I can see my driveway. I live at the end of a close, so there's no through road here. So the driveway, I can see my driveway, so I can see any car or any delivery vehicle coming up to my house. And my computer is supposed to be arriving today. Now, I'm a little bit skeptical it will arrive today. Now, I was told when I did order the computer, it would arrive today. But even though the computer arrived in Brisbane this morning, thanks to tracking, I can track it, for some reason, it arrived late to the distribution center to the west of me. So I went from the airport, I'm assuming it was flown in, went from the airport to a place well west of me, and then has to come back. Anyway, apparently it arrived at the distribution center a little bit late. That's what it said on the tracking, late. And then they pushed the arrival date to tomorrow. Now, it doesn't mean it will come tomorrow. There's a chance it might arrive today, but they do say by tomorrow it will arrive. So there's a chance I might have to be a little bit patient. And in this sort of circumstance, I don't like to be patient. I want it now. So I will be looking out every so often. Now, the other thing I should mention is my window here faces west. So there is a sun. I do have the blinds down a little bit. So the sun should be lowering through the rest of this recording. And thankfully, I think the blind is low enough. Anyway, so let's talk about what happened on Wall Street overnight. So GDP numbers came out. And if we go to trading economics, we might have to refresh this. Where is it? It's not there. Anyway, negative GDP growth for United States, which was an unexpected, negative surprise. No one expected GDP to be down this particular quarter or last quarter. I wouldn't have been surprised if GDP is negative this quarter and the next quarter. So I think the chances of a recession, a technical recession, are much higher now because of that little bit of a nasty surprise. But there are reasons behind it. There are reasons behind that are not so negative. Now, some of the other macroeconomic news, which is fairly interesting, Australia trade surplus largest in 13 months. Japan 10-year yield tumbles as Bank of Japan cuts outlook. Gold extends losses for the third day. I do expect a bounce in gold sooner than later. And South Korea exports unexpectedly rise. And Australia's manufacturing sector sees continued growth. So not all negative there. And you will see what ChatGPT did. Actually, before I say that, what about the Wall Street reaction? Let's have a look. So they did release the GDP numbers before trading began, if I remember correctly. And if you have a look at the 1-minute data, NASDAQ on open drops about 2%. Yeah, 2%, and continued to drop. So at one point, in the morning trading at about 1 hour after trading began, actually about 30 minutes after trading began, NASDAQ was down about 3%. And then we saw an almighty rally, not only on the NASDAQ, also the S&P 500 and also the Dow Jones. They all ended up positive for the day on this almighty rally, particularly in the last 30 minutes. So when I woke up, the NASDAQ was down about 1%. And then I saw GDP numbers. And I went, oh, that's understandable. And then there was this massive rally in the last 15 minutes. And I think maybe there is a reason behind that. I'm just going to say maybe there is a reason, but a really good rally on Wall Street overnight. So I think there was a negative reaction to the GDP numbers, which is understandable. And then there was more thinking about it. People digested the news a little bit more, and then they realized there's a reason behind it. And then some more news came out towards the end of trading, possibly some loose lips, that sort of thing. And that's why we saw a lot of these indices rally significantly in the last probably 15 minutes of trading. Yeah, about 20 minutes of trading. I was a little bit surprised to see all the indices up because I started to go for the walk at 5:30, and yeah, a lot of them were down by about 1%. Anyway, so that's what happened overnight on Wall Street. So possibly we could have had a really bad day on the ASX. So I did ask ChatGPT why Wall Street rally overnight after GDP unexpectedly was negative. Okay, first thing it gave, so despite an unexpected 0.3% contraction in US GDP, there are a few factors at play here. The first one is strong corporate earnings. Now, in my top 5 stocks of the day, I do have Microsoft and Meta combined into the one. And the reason is because both companies released their results after the market had closed. And these results were spectacular. They were spectacular. In fact, after market trading for Microsoft, I think share price was up about 8% last time I looked. So a really positive results for Microsoft and Meta. So if it went the other way and results were really negative or really bad, I think that would be a little bit concerning. So I'll talk about, I'll say it here. So Microsoft and Meta platforms reported better than expected earnings, boosting investor confidence in the technology sector. Meta's got revenue guidance and Microsoft's positive outlook contributed to a rebound in their stock prices. But both companies, I'm pretty sure, released results after the market had closed because that's what most of them do. Cooling inflation data. This is another one. So this had a positive effect. Personal consumption expenditures index showed a slight increase to 2.3% year over year, easing concerns about rising inflation. Now, I think we're getting a little bit ahead of ourselves or behind ourselves because I don't think any sort of inflation because of tariffs would be hitting the market just yet. Anyway, so I'm not sure if this is necessarily a great thing. Investor sentiment and market resilience. Despite initial reactions to the negative GDP report, investors show resilience leading to market rebound. That's nothing. That's an empty reason. That's what I'm going to say. Now, just below that, they do mention something really important. This is really important, much more important than that part 3. However, it's important to note that the GDP contraction was primarily due to businesses stockpiling imports ahead of anticipated tariffs, not a collapse in domestic demand. This decision suggests that underlying economic fundamentals might still be strong, supporting the market's positive response. Now, the problem with that is if we do see, and we're starting to see the effects of tariffs, starting to see a few tweets about from importers saying how much they have to sell their products for now, which is significantly higher. I've even seen tweets from MAGA supporters who are questioning why are they paying more for products now? I thought the foreign government pays the tariffs, not us. And yeah, you just see the replies to those tweets. Anyway, so I'm not sure if we're out of the woods just yet because GDP is still negative for the quarter. We did see some negative employment numbers as well come out. I forget what exactly that was, but I'm not sure we're out of the woods just yet when it comes to the markets and also to the economy. Okay, so that's ChatGPT. Now onto the ASX today. And yeah, we've had a relatively good day. It could have been much worse. I suppose mining's down 1.19%. Tech's up pretty good. That's the whole reason tech's up is because of Meta and Microsoft. I don't know if you can say, well, Meta and Microsoft had a really good quarter, therefore tech should have a good quarter. I'm not sure it exactly works like that because Meta and Microsoft are much higher quality companies than most of the companies in the world. I want to say that again. Meta and Microsoft are much higher qualities than much higher quality companies than most of the rest of the companies in the world. In fact, I'd say these are the two highest quality companies in the world. I wouldn't say the top two. I'd say they're among the top 10 highest quality companies in the world. Maybe top 20. Yeah, maybe top 10. Anyway, so a pretty good day for us. And the other thing I actually should mention, S&P 500 has been up 7 days in a row. I might just ask ChatGPT, S&P 500 up 7 days in a row now. I'm using ChatGPT way more and more these days. I think it's just becoming better and better. How unusual is this? How unusual is this? I think the way I have to improve is how I frame questions. So 7-day winning streak in S&P 500 is relatively uncommon, but not unprecedented. Historically, such streaks have occurred with some regularity. So there's a little bit of a contradiction there, particularly during strong bull markets. We're definitely not a strong bull market. It does happen quite a bit. Look at that. For instance, in the past 30 instances of such streaks, 25 led to positive 1-year returns. There you go. Anyway, so let's move on to the ASX, or back to the ASX today. So a pretty good day for the markets. And even though we were down on open, I think it was just our market sort of reacting to the negative GDP numbers. And also the other thing I should point out is the American futures are up because of Meta and Microsoft. And so NASDAQ futures up 1.44%. And I think a lot of that is because of Meta and Microsoft, because I had a look at the futures for all individual companies, and some of these companies were up a fair bit, not only Microsoft and Meta, also NVIDIA was up a fair bit, and a few other companies as well. Okay, so let's go back to the ASX today. Look at the best and worst performing sectors. IT, understandably so. Again, I'm not going to say Meta and Microsoft saved us, because I don't think that's absolutely true. But because of their quarterly numbers, IT's had a really good day, up 3.59%. Real estate and staples both up by more than 1%. Interesting, staples up. Woolworths did release their quarterly, so that might have been a little bit better than expected, maybe. So let's have a look. Consumer staples by market cap. In fact, pretty good around actually everyone had a pretty good day. Yep, they all had a good day. So I thought maybe Wolves had a really good day, but no. And a pretty bad day for utilities, materials, and energy. So today has not been the day to be in mining. In fact, I did see that copper was down a fair bit. Let's see if it's rallied a little bit. No, it was down, down 5.41%. And I think that's because of the economy. So again, Dr. Copper, there is a bit of a relationship between copper demand and the state of the economy. So if you do see negative GDP numbers, that could be a hint that the economy is struggling and the demand of copper will decrease. So that's understandably why copper prices might have dropped. And gold, gold's down a little bit. Yeah, gold. It's still not negative, this chart. So we had a few bad days back in start of April, and then a nice rally. So this is just a nice little buy the dip or opportunity for gold. Okay. Indices, I won't look at the ASX 20. Oh, no, I will. It's down. It's negative. Down 0.03. Why? I would say iron ore's down. So BHP, Fortescue, Rio Tinto, Woodside, they're all down. Maybe a few of the banks are down. Yeah, banks are very, flat. So a few of the banks down. I'd probably say ANZ's down, Westpac's down. So let's have a look at the ASX 20. So we have a pretty good idea which companies might be down. We have a really good idea which companies are up. WiseTech's probably up 4%. Goodman Group's probably up a fair bit. REA Group's up a fair bit. Aristocrat's up a fair bit. So let's see how right I am. So 11 companies up, 9 down. And the worst performing companies, Woodside, BHP, Rio Tinto, Fortescue, did not pick QBE. There's Aristocrats actually down. NAB, ANZ, and Macquarie. There you go. Did I say NAB and ANZ, or did I say Westpac? I can't remember now. And the best performing companies, whoops, I clicked on that one too much. WiseTech, Goodman Group. There you go. WiseTech up 5.38 and Goodman Group up 3.3. I was wrong with, I thought maybe REA Group. Wait there, REA Group's not there. Oh, there it is. Only up 0.22%. It's more tech than I think people realize. Anyway, let's turn our attention to the top gainers. There is a company here that I did not put in my top 5 stocks. I do know a company called Andromeda. I do like the name Andromeda. This is going to be number 1. Yep, there it is. Andromeda up 92.86%. But they're coming in number 2. We have the stock of the day, Dimerix, only up 45.83%. So when I recorded a standalone video, it was up 50%. So has pulled back a little bit, but still trading in the range of the day, which is between 66 and 76 cents. So still sort of in the middle of that range. AMA Group's in my top 5 stocks. I definitely have to talk about that one because I mentioned recently that if AMA Group gets above 7 cents, that would be classified as a breakout. They released a trading update, share price up 21%. So I'll have to talk about that company. And what else is here? Nothing. Oh, there's Brisbane Broncos. Jeez. Silly market. And list of companies best gainers by market cap, WiseTech, HMC Capital, Digico, Infrastructure. So people liking data centers again for some reason. And I think you definitely can understand why these two companies are up. So definitely a bit of a data center tinge there. And with Meta and Microsoft doing really well and the expansion into data centers they've talked about recently, I can definitely see why a positive or sentiment has swung positive for those two companies. Whether it remains positive moving forward remains to be seen. Platinum Asset Management did mention some sort of merger or something. Didn't really have a look at that. Baby Bunting released a trading update. That's in my top 5 stocks of the day. And Doug Technology also released a trading update, and that's also in my top 5 stocks of the day. So you should know all my top 5 stocks, even though there's 6 of them, because I've mentioned all 6 companies. There you go. Now let's have a look at the top losers. I have no idea what might be on this list. Okay. We have DY6 Metals is wide open here. Yes, wide open's here as well. So DY6 Metals and Wide Open Agriculture, 2 of the worst performing 6 companies on the ASX, both released positive announcements the other day. And then the ASX said, no, you've got to release more information. We need more clarification on these announcements. And looks like they both revealed those clarifying statements. And DY6 Metals is down 45.7%. And Wide Open Agriculture is down 21.13%. Let's have a look at the charts for both of these. By the way, I did open up both announcements for DY6 Metals. I saw nothing overtly wrong with it. And you can see the market reaction today is fairly similar than what we saw back in May. There was a really big rally, one-day rally, and then the share price just tanked the next day. So this could be a carbon copy. I don't know. If you go back to this announcement, DY6, I have no interest in this company, so I don't know why I'm talking about it. So updated announcement, high-grade gallium potential. You probably have to compare the two. They didn't mention, I don't remember if they mentioned, I definitely remember Wide Open mentioned something that was significant. So an updated version of the announcement is attached, incorporating additional disclosure, including in JORC Table 1 relating to the historical drill program and source of information. Okay, I think I read that and just went, no, I'm going to move on. Wide Open Agriculture, however, they did actually announce something that was interesting, or they put a sentence or a comment that was interesting, and I can definitely see why the share price might go down on this. There it is. The second paragraph, which is only one line, WOA confirms the agreement provides no immediate financial impact to the company. So there you go. And that's why the share price, I think, might be down 25% for that company. Okay, let's move on to the rest of the top losers. Anything of note here? Some of these companies might have released a late Appendix 5B or 4C, but I'm going to move on. Vacuum Technology is down 13.89%. I've mentioned this company twice in the last 2 days. Not surprised the share price is down towards 1.5 cents. I think the most ridiculously timed capital raising I've seen for many years. They should waited a few weeks. That's all they need to do, wait a few weeks, and they could have got the capital raising done at a price that was double from where they did it here. So I think the management needs some lessons in how to do capital raisings, although they might have been pressured by investment bankers, don't know. And the top losers by market cap. Judo Capital, what's happening there? I don't think Judo Capital released anything today. I don't remember. I would have noticed, unless they released something after 10 a.m. Oh, and they did. Is the share price down because of this? So it wasn't that long ago. You can always tell. Oh, no, the share price is down. Whoa. Judo Capital. Okay. This one, I would have been confused why the share price was down so much. And I was going to say, they released this trading update not that long ago. So we're talking about 25 minutes from when I'm recording this video. And I was just about to look at I didn't even look at the share price. And I was going to have a look at the trading today. And if you have a look at the 1 day, 1 minute, share price plunged at, when did they go into a pause? Because they went into a pause. So share price started going down at 2:53 p.m. Oh, no, I think that's right. So, yeah, so it looks like this trading update, this is, that makes sense. This is 20 minutes delayed. So this is 2:42 p.m., right? So they released this at 2:41 p.m. So that means shares would start trading again at 2:51 p.m. Oh, this is so confusing, because if this is 2:42 p.m., shares of Judo Capital should be in a trading halt. But looks like they'll pause at 1:30 p.m. So it looks like the share price had already started going down before that. But if you have a look at the chart, this is the 1 minute chart via ComSec. Share price started decreasing at 2:53 p.m. And I'm just going to confirm that via TradingView. No, yeah. So TradingView, we had trading all through the day, which makes sense because the shares weren't paused until. Oh, you know what it is. I've got to go back a little bit further. So, yeah, the share price was dropping before this. Sorry, I'm just confusing myself here. Share price was dropping before this announcement. So this is a case of maybe loose lips. So it looks like the share price was down 6% before they went into a trading halt to release this trading update, and it was negative. This is a case where I believe ASIC should investigate, because obviously there was some selling. I did not see any sort of Judo Capital release any sort of news flow today. So this, in my opinion, is a case of insider trading. Someone saw this and were offloading their shares. I think this is so obvious. This is so obvious they should investigate. It just looks way too coincidental for it not to be insider trading. Someone saw this information. Anyway, we don't even have to open up this trading update. It's going to be negative. I could go through it and find out why it's negative. Is it any sort of it's a downgrade. So in light of current market conditions, Judo now expects GLA at 30th of June 2025 to be between 12.4 and 12.6 billion. Growth is expected to be lower than guidance provided the first half 25 result, given market uncertainty impacting customers, the slower initial ramp-up of warehouse lending, and balancing growth and economics. Okay, so this is a downgrade for Judo Capital. And let's have a look at the chart for the company. And because, okay, so this is interesting. So because, I'll get rid of this. I was trading this, but I'm not trading it anymore. So we can get rid of all this. Because the share price is now $1.51, And because trading view is a little bit delayed, share price is now at these lows we saw on the 7th of April. So the chart is starting to look really negative for Judo Capital. So this usually does not happen. This usually does not happen when a significant announcement is released just before I start recording. And Judo Capital have done that. So there you go. And that's why there's a massive discrepancy between market index share price and also the real share price, because there's a delay here. Droneshield. I'd say this is just noise. I'm pretty sure they did not release anything. It could be a nice little buy the dip situation for Droneshield. Or maybe there's, you know what this is? You know what this is? This is, wasn't there agreement between Ukraine and the United States, between Zelensky and Trump? I'm pretty sure there was an agreement. So this is maybe selling based off that. That's what I'm thinking right now. I just remembered there was an agreement between those two countries. It seems like there is. Anyway, so that's Droneshield. And anything else of note here? Silver must have had a bad day. Okay, let's move on to the top 5 stocks of the day. Now, before I do that, I should just mention, we're going to have a look at the we'll just have a look at announcements today. And I think I mentioned yesterday's video, the last day of January, April, July, and October tends to be by far the busiest. So what I've just done here is filter price-sensitive announcements. So we're looking at price-sensitive announcements here. And yesterday we had 770. So far today, only 94. So today is much quieter. But what I did this morning, I went through all the Appendix 4Cs. Actually, it was only Appendix 5Bs. I went through all the Appendix 5Bs that I did not look at yesterday. And there was a fair few. It took me about 30 minutes to do that. So sometimes when I look at Appendix 5Bs, it could take me only a few seconds to have a look and then move on to the next one. So I did go through quite a few because a lot of Appendix 5Bs were released after trading had finished yesterday. I just can't believe how many were released at that point. It seems like many of these mining companies decide to release it at the last second, to release it among the rest of the crap. And I do have to admit, most of them, if not the vast majority of these Appendix 5Bs were absolute crap. A few companies were put into trading halt. There we go. So Metals Tech, MCS Services, and Nika Tambang were all put into suspension because they did not release financial statements on time. However, Ananka Tambang, ATM, did release theirs because I saw it. ATM, I'm pretty sure I saw it. And I just noticed MCS, or where it's called, MCS Services, have just released their Appendix 4C, so it's a little bit late. And there's Judo Capital. I should have a look to see if there's been any other interesting announcements since 10 a.m. There we go. So Platinum Asset Management, potential merger with L1 Capital was the last announcement I saw. And then Whatso had a business update at 10:12 a.m. And share price is up a little bit. And there's Andromeda Metals. Oh, I totally forgot to talk about Andromeda Metals, didn't I? So, in fact, I'll talk about Andromeda Metals because that's, I suppose, worthy enough. Share price is up a fair bit. Okay, so let's have a look at Andromeda Metals. So, share price up almost 100%. 78 portfolio. Share price has been sold off a little bit. Achieves HPA breakthrough. High purity alumina. I believe HPA is high purity alumina. I could be a little bit mistaken here. Let's see if HPA is high purity alumina. They might even mention it here. They do mention purity here. 99.99% purity. Here it is, high purity alumina. Yeah, they do mention it. So pleased to announce it has progressed its plan to commercialize the production of the critical mineral high purity alumina. There's a few of these companies on the ASX. One of them is Alpha HPA. There was another one which I forget its name. And I started following this company, the name I forget, the company whose name I forget, about 10 years ago, and they've done nothing. So I have little faith in these sort of companies just because of that one company. So I'm being a little bit biased in saying that. Anyway, so it seems like a pretty good announcement. The market likes it. Share price has pulled back its touch. I do like the name Andromeda. And let's have a look at the chart. Is this a reason to get ooh, geez. Loose lips again. Come on. Look at the share price before this. Yeah, that didn't release anything. It's just ridiculous when I see this. Share price going bonkers with high volume. Someone knew this was about to be released, and they took advantage of it. And that's what I'm going to talk about when it comes to Andromeda. I have no interest after seeing this chart. Okay, let's go to the top 5 stocks of the day. And we'll start off with, who is that number 5? Oh, Meta and Microsoft. So this is earnings calendar. So this is NASDAQ or from the NASDAQ website. This includes NASDAQ companies or companies listed on the NASDAQ, but also the New York Stock Exchange. So you get them all. And overnight or this morning, our time, Microsoft and Meta released their results. And wow, they beat expectations. I actually did ask about this, I think somewhere here. Oh yeah, I did ask here. So revenue, much better than expected. In fact, I'm going to ask why has Microsoft and Meta results table them for me. This might be full-year results. I should have said quarter results. Was this the first quarter results? It does look like it. In fact, where is it? I'm there. Is that from April 30, 2025? I just want to confirm. There we go. Yes, yes. So let's go back up. And the thing I took away from these results was they beat expectations. I didn't have a look at any forward projection, but there was a mention that Microsoft had a very positive outlook as well. So revenue was a pretty big beat, particularly for Microsoft. I think even earnings per share was a pretty big beat. Yeah, 346, and they beat estimates of 322. A nice increase for both companies. So the first thing I always look at is revenue growth. So 30% for Microsoft, 16% for Meta Platforms, and profit 18% for Microsoft, and 35% for Meta. So yeah, really good results for both of these companies. So that's why, one of the reasons why, if you have a look at some of the aftermarkets trading, you'll notice that in after hours, the share price of both these companies were up a fair bit. So if you go to after hours, Microsoft up 7.26%, and Meta in after hours trading up 4.33%. And I did see quite a few other tech companies in the United States were up a fair bit as well. So very important, these results, when it comes to markets around the world. And we've seen the impact of these two companies' results on the tech sector in the United States, in Australia itself. Tech sector up significantly. So let's have a look at the chart for both of these companies. So have a look at Meta first. I should also mention I own both of these companies. And I would also mention, even if you have a look at, so I bought Meta. It's interesting, I bought Meta a year ago. I bought Meta on their last year's March quarter results. And the reason I bought on that day was the share price fell 10%. And I went, oh, share price down, I'm going to buy. That was as simple as it took. I was watching this for a long time, and then I bit the bullet on that day. And this is a long-term position. All my American companies, a few maybe not, but most of my companies that I own that are listed on the New York Stock Exchange or the NASDAQ, they're long-term positions. I don't really care about the chart. In fact, the only reason I might have a look at the chart is to see how they compare to, say, the 200-week moving average. And if I do see weaknesses, I might add to my position. So if you have a look at Meta, it's actually a good time to buy some Meta shares because share price has pulled back a fair bit from its highs. And the same thing is probably true for Microsoft, or maybe. So I bought Microsoft a little bit earlier than bought Microsoft about 3 years ago, maybe. So I bought Microsoft or not quite 3 years ago. So 2.5 years ago. Actually, that's like 2 years ago. And this was just based off share price tumbling after the bear market we saw in 2022. And then I still remember buying when I saw this chart for Microsoft. So I put this downtrend line. I went, oh, if share price breaks above this downtrend, I'll buy some shares. And it took me about 2 weeks to see that it broken above it. And you notice the share price actually dipped just after I bought, and it actually hit the downtrend line, which became support, and then took off after that. So that's a beautiful test of that breakout. Anyway, so I bought Microsoft on that day. Share price had been below the 200-week moving average for a while, so great time to buy any of these high-quality companies is when that happens. And share price is, just like Meta, is below the 200-week moving average, but really good results for both companies. So these could be good buying opportunities for both companies if you want. Okay, so that's Meta and Microsoft coming in at number 5. There's an ant on my paper. Coming in number 4, we have Baby Bunting. Share price up 7.2% on Store of the Future and Trading Update. Do you know I like my trading updates? This one's pretty good, I thought. So comparable store sales up 3.7%. Year to date, comparable store sales up 2.9%. Year to date gross margins 40%, up from 36.8% for financial year 24. So things look like they're moving in the right direction for Baby Bunting. I don't care anything about their store of the future. Don't care at all about your store of the future. Financial year 24-5 outlook. This is sort of a weird upgrade, but it is an upgrade. So they have increased the lower end. So initially they had a range, and what they've done is, well, the bottom of our range is more than likely not going to be hit. We're going to be higher than the bottom of the range, so we can actually increase the lower end of the range. So initially their range was between 9.5 and 12.5 million. Now it's between 10 and 12.5 million. That's, in a weird way, an upgrade, and that's why the share price is up. So things are moving in the right direction for this company. They also mentioned here a significant proportion of second half sales are attributable to the final 6 weeks of the financial year. I find that interesting as well. So they need to do well. If they don't do well in the last 6 weeks of the financial year, then they might have to issue a downgrade. Maybe, but I'm just saying that. Anyway, that's probably history. History has shown to Baby Bunting management that usually their last 6 weeks of the financial year are the best 6 weeks for this company. So let's have a little chart for Baby Bunting. What we'll do is go back to the daily chart. Oh, I was looking at the weekly chart for this. Yes. Anyway, Baby Bunting. I have to go back to Microsoft and Meta because I was looking at the daily chart, not the weekly chart. So this is the daily chart for Baby Bunting. We'll put it in my favorites. There we go. So share price had been a long-term downtrend back between 2021 and 2023. Share price dropped from over $6 all the way down to just above $1. Does look like share price is trying to consolidate, go sideways. It's been going sideways for a while. A little bit of volatility in that sideways move, but that's okay. And does look like the volatility is sort of becoming less. I do prefer when share price is going sideways to be much lower volatility than what you see here. But I think things are moving in the right direction for Baby Bunting. I don't see any breakout just yet for the company. Share price did dip a fair bit. So for me, this is not the announcement for me to get excited about Baby Bunting. I need a little bit more from the company and also from the chart, but things are moving in the right direction. And I do think it's worthy to just be following these companies a little bit more closely, particularly if you like the company. If you like the company. Okay, charts for Microsoft and Meta, and this time, weekly charts. Sometimes I don't catch stuff. Like I was looking at the daily chart, but talking like as though it was a weekly chart. Okay, so here we go. So this is Meta's weekly chart. It makes more sense now when I look at this. So well above the 200-week moving average. This is probably one of the reasons why I haven't added to these positions, because they're still well above the level where I would probably say these companies are looking like they're good value. And that is if the share price falls below the 200-week moving average. And not only that, I want to look at the valuation metrics like P ratio or price to free cash flow or enterprise value to EBITDA or enterprise value to EBIT, any of those, or free cash flow yield, something like that. So anyway, so Meta platform is still well above the 200-week moving average. And I think Microsoft was as well, MSFT. Yes, and in fact, you can see Microsoft, it has generally been above the 200-week moving average since 2013. That was after, what was it, 13-year consolidation period? 13 years the share price went sideways for this company. 13 years. During this period, Microsoft grew, not the share price. The company grew and grew and grew and grew. But during this period, the reason why the share price went sideways is because we saw multiple contraction. The P ratio was going lower and lower. The market was less and less willing to take or pay a premium for this company. That all changed in 2013-14. I think it was a change in CEO, maybe, that was helping it. But since then, share price has gone up significantly. And since then, share price has consistently remained above the 200-week moving average. The only time it fell below was great buying. That was back in October 2022 and January 2023. Saw it briefly go below that moving average. Okay, let's go back to stocks of the day. And coming in at number 3, we have Doug. So the other day I was talking about Pete. Now we're talking about Doug. Of course, Doug is not spelt with an O, just spelt with without an O. Doug Technology. This is a company I've traded in the past. I wouldn't call this a high-quality company, so not the sort of company I own for long term. Share price up 7.8% on a business update, which is just like a trading update. I had a look at this because I'm interested. Share price has dropped a lot. So I do think this is getting to the point where it's looking interesting again in terms of valuation. And this was, I thought, a pretty good update. Doesn't express why the share price has dropped significantly. So we're talking about total revenue, 16.5 million for the third quarter. Software delivering 23% revenue growth. EBITDA for the third quarter, $5.3 million US dollars, 15% increase on the previous corresponding period. Operating cash inflows, $3.3 million US dollars for the third quarter. So we're talking about analyzed free cash flow or operating cash flow of, what's that, times that by 4, 12 million, exchange rate. So we're talking about 16, 17 million Australian dollars. That's pretty nice operating cash flow. Cash held 16.3 million. Net debt 6.6 million, and some other good stuff in this. I like this one. I thought this was pretty good. Not shocked the share price is up. So let's have a look at the chart. Is this an opportunity? Now, I don't and would not consider Doug Technology to be a high-quality stock just yet. And I don't know why the share price has fallen a lot, because I still think it's a pretty good company. But I think maybe people are just trading it. Share price in a beautiful uptrend. So I bought Doug back in early 2023, rode it to almost the top. I forget when I sold. I think I sold in this little period here, back in July of last year. Share price rallied just after I sold, and then it, for some reason, just dropped. We have seen a little bit of selling today, and I think that's understandable because the share price has been in a downtrend. And I think a lot of shareholders who bought higher prices probably seen the opportunity to get out. Share price did drop as low as 86 cents, 85 cents, not that long ago. So nice little rebound, but just based on this chart, I don't see any shift in sentiment or trend the share price just yet. I need a little bit more proof, but I think this was a pretty good update from Doug, my favorite technology company. Well, no, my favorite technology company named after a person, Doug. We should also have Brian Technology and Michael Technology and Cynthia Technology. I'm just putting out names. Coming number 2, we have AMA Group. I did mention this company not that long ago. Maybe the technical update video where I said, if it breaks above 7, that would be a breakout. I said that word twice. If the share price went above 7 cents, this might be a breakout. Lo and behold, today, it's gone above 7 cents on a business update. Yes, you notice a bit of a theme today. Financial results, business update, or trading update, or business update, business update. And yeah, we're going to see a lot of these sort of announcements over the next few weeks. But so far today, they've been quite positive. So AMA Group, definitely not a high quality company. Really low margins. They're in smash repairs, that sort of thing. So really low margins. I think they still have a fair bit of debt. And here's their financial summary. I had a look at this. I was like, oh, whatever. I wasn't that enthused. I'll be honest with you. Wasn't that enthused. Now, normalized EBITDA was nice, but operating cash flows was okay. Nothing significantly great. Revenue a little bit higher, but not significantly higher. So I wasn't committed to this particular announcement or these particular results. So we go financial year 25 outlook. Capital Smart performance will exceed prior year. AMA Collision have positive pre-AASB 16 EBITDA for full year and second half of 25. Expecting pre-AASB EBITDA to be between 58 and 62 million. Yeah, so I didn't know what to take from this particular update. And then the market told me what to think. And the market said, oh, this update's pretty good. Share price has potentially broken out. I'll put a line at 7 cents. So I'll put just a line there. You could also say, if you go even further back, there is a bit of resistance just above that. So you could say the next line or price to get above is about 8.5 cents. But I think we're going back over a year where the share price, AMA Group share price is at a 1-year high. So that's all I need. Our share price has gone above 7 cents. So I was looking to see if the share price could get above 7 cents. It has. It has. So a breakout for AMA Group. So a pretty good day for that company. And of course, stock of the day is Dimerix. They did announce a licensing agreement with I'm going to have to try to remember this one, Amicus Therapeutics. I thought it was pretty good. Now, in my standalone video, I compared the reaction here to the reaction of Neuren Pharmaceuticals back in August 2018. Completely different reaction from the market. In 2018, Neuren Pharmaceuticals share price went down 43%. Yes, down 43%. Dimerix share price went up 46%. And I think the reason is because of the lower upfront payment. Neuren received $10 million. Dimerix received, 30 million $30 million. So that was the main difference. So it seems like the market or the expectations for Neuren back in 2018 was a higher upfront payment. So completely different reaction. The other thing I want to point out here, this is not, in my opinion, a company making an announcement. That particular announcement is successful phase 3 trial. So there is still a lot of risk when it comes to this company. There's still a story of stock. And when I bought Neuren back in December 2021, it was on the back of successful phase 3 trials. Now, in my opinion, if Dimerix gets successful phase 3 trials, the share price is going to soar significantly higher. I wouldn't be surprised to see the share price up 100% in one day if they get successful or announce successful phase 3 trials. That, for me, will be the company making an announcement. Even FDA approval, I think, would be almost formality after that. So for me, the announcement for this company is phase 3 trials. Okay, so that's Dimerix. Won't show you the chart here because I showed you in the standalone video. Now onto a question or two from you. Okay, this is a really interesting one. This is King Kasuma. Hi, Mr. Kneppy. You call me Sir or King. No, I'm only joking. I know you're not a big fan of resource companies, but would love to get to your take on PVE, which is Po Energy or something, and the latest Appendix 5B. Do you know why I know it's Po Energy? Because I saw this Appendix 4C. PVE, Po Valley Energy, Po Valley Energy. So what I do is on my notebook, I write down all the Appendix 4Cs or any sort of TIG code or any sort of announcement that I want to check a little bit more. And for today, all the Appendix 5Bs that were released yesterday evening after market closed, I wrote down all the ones I want to have a closer look at. There wasn't many. It was about 10. And Po Valley Energy was one of them. They released their Appendix 5B at 6:14 p.m. I haven't had a closer look at it, but what else do you have to say? The share price doesn't seem to match the financials. Or am I missing something? Gas producer based in Italy, share price 4.4, noting that is only very lightly traded. Markup 51, profitable 4 million in 2024, increasing operating cash flow. So Q1 2025, 3.4, now has 11 million cash in bank, minimal debt, exploration upside. Now, it seems like you know way more about this company than I do, because this is probably the first time I've taken note of Po Valley Energy. In fact, the share price is down. Share price is down. Let's have a look at this one. So what drew my attention to this one? Well, there's actually one reason company was drawn to me. Let's have a look. So cash receipts, 2.197 euros. So Italy euros. Operating cash flow positive, 1.7 million. First thing that drew me in was a lot of receipts, not much spending. So this would be like what's it called? REM sense? Not a lot of receipts, but they're running a really lean machine. So a lot of that receipts goes to the bottom line in terms of operating and free cash flow. So they don't spend a lot here. Production, 196,000, staff costs fairly low, administration costs fairly low as well. And 1.7 million operating cash flow. Cash on hand increased from 5 million to 6.6 million. They have no debt. Yeah, and they don't have to answer question 8. I don't know. I'm just going to have a look. Oh, no, I closed it. I think I closed my spreadsheet. So I won't open up in here. No, I do have it up. I haven't. So I probably should. I don't know if I've got all the data here for Po Valley. Oh, I'm missing the last 2 quarters. So I'm missing the last 2 quarters. So what I'm going to do is go back through the last 2 quarters, because the last 2 quarters I haven't gone through every single Appendix 5A, and I missed Po Valley. So this quarter I went through every single one. So you do see gaps on occasion. And some reasons, sometimes you see a gap because the company is no longer issuing Appendix 4Cs or 5Bs. So I usually just put an X there. And sometimes I might even like CHM. But sometimes I just miss the Appendix 5A because sometimes there's a lot. So you do note there is a bit of an increase for Po Valley. In fact, we can actually fill it in right now. We can do it right now. And what I'm going to do is I'm going to do a receipts graph for you on the fly. Let's do it on the fly. So receipts for the December quarter. December quarter, 1895. 1895. And receipts for the, what's the previous quarter of that? September quarter. Receipts 1690. And in fact, we do see this steady. We've got to put the right numbers in. We do, I've got to turn my mouse around. There we go. We do see this nice steady increase in cash receipts. I'm not even going to do the table for you. It's gone from 708,000 in October or September quarter 2023 all the way up to 2.2 million. And they've been operating cash flow positive every single quarter. So what is going on? What is going on? The other thing I like to look at is shares on issue and market cap. So market cap is about 50 million, shares on issue 1.16 billion. I don't have any problems with that. Share price is well above 1 cent. So let's have a look at the chart. And so what we're seeing here is, okay, so a few interesting things here. Share price in a downtrend in 2023. Share price in 2024 sort of leveled off, going sideways. And we have started to, we're trying to see, share price is trying to break out. Share price did get to about 4.8 cents not that long ago. Now, oil prices are dropping, so I'm assuming this is oil. Is it oil or gas? Gas, it's gas. Dealing with gas and oil fields. So there are a lot of things I don't know about this company. That's the other thing I should mention. Now, we did see a big volume coming in on the 31st of March, and we have seen heightened volume after that during April. So that is interesting in itself, that we are starting to see a bit higher volume coming in, and there is potential breakouts happening with the share price. So definitely one I'm going to take a closer look at in the future because of their Appendix 5B, and also the chart's starting to look more interesting. Yes, so there is things to possibly like about this company, but how long? I mean, who knows? Maybe they're ongoing production for the next year. I don't know. So that's why you probably know way more about this company than I do. And when I say way more, I'm saying you might know way more about this company than I do. So they do have an investor update released on the 3rd of April. So there are a lot of things you can look at. They also released an annual report on the 30th of April. So there are a lot of things, that was actually yesterday, there are a lot of things you can look at to understand this company a little bit more. So I'm going to do that. That's why I write these ticker codes down, to have a closer look. So thank you for that, King Consumer. And I'm just going to, Thorley Photography says, Point Terror, today's pullback could be a nice entry point. Will next quarter also disappoint? I am going to say no, but that's trusting management, because in the report they did mention that receipts will rebound to the previous quarter. And if that happens, now would be a good time to buy some shares in Point Terror. Okay, that's all I've got for today's video because we're getting to an hour long. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice or help, find someone who's qualified who can help with your own financial needs. That's it for this video. Have a good day. Bye.